And Ivan, if you were to get a bit more granular with the supply and demand fundamentals in the copper sector right now, it looks like there might even be sort of a net balance in 2024, and then a significant deficit starts to spread in 26, which then really amplifies over the next 10 years. Main trigger points for creating that demand, and then if you could touch on the difference in getting new supply to market in copper relative to the gold sector.
Sure. I actually have taken one gold mine to production, but the time frame to bring a copper mine online is really slow. I'll give you an example. We're looking for a big copper mine, one that would meet the thresholds of some of the larger mines in the world. It'll probably be 20 or 30 years if we're successful before that mine comes to market to have a huge impact on supply, assuming it's the quality that I'm advertising here that we need. So time frame to discovery is not going to meet the actual supply issues that we're facing with various mines running out of metal. The other factor is those big holes in the ground in Chile, some of those larger mines, the deeper you go, the more expensive it is. So there's a cost factor as well. So I think that the big thing to be more granular about it is the time to meet supply demand needs. As demand is increasing, it's just not going to be met in a timely manner. I don't think the globe was ready for the copper demand they're going to create to try and modernize and have the electrification from a mining or exploration perspective. We're at the slowest end of the spectrum making a big discovery. That's the biggest reward as a shareholder. But from this point forward, once you make it, it's a long road to meet those demands.
And Ross, you're nodding along there with a couple of those points at the end. The shareholder experience, what was catching your attention?
Well, the thing that Ivan said that was correct, and actually to some degree Rick, is that copper is different than, say, gold or even silver or many other metals in that most copper mines of the world there's very few of them, first of all. There's not very many copper mines. There's probably 20 times more gold mines than copper mines. And the reason for that is that, most copper deposits are really big. These deposits called porphyry coppers. Like Highland Valley, I don't know if any of you have been up to the interior of BC near Merritt and have driven along, I forget the name of the highway, it's Highway 15 or something, but it goes right through Teck's Highland Valley ore body, and it's absolutely humongous. You drive by these tailings dams in the open pit for miles and miles and miles. These are giant ore bodies, and they create giant wealth for decades and decades. Highland Valley's been going since the 60s. So, to build a copper mine these days costs billions of dollars. First Quantum just built one in Panama. It cost $6 billion. Teck just finished an expansion of one in Chile. It cost $8 billion. So, from the standpoint of junior investing, if you're a junior company and you lock into one of these big copper deposits, as to Ivan's point, it takes years and years and years to explore them, develop them, but very few juniors. And there are exceptions. There are some exceptions. They're not very common. Very few juniors have the money to be able to afford the capital cost to build those mines. So the strategy for those companies really is only develop and sell. It's not a bad strategy. It works pretty well. But if you're an investor, you've got to try to lock into those companies that have the potential to sell themselves to large companies with the capital capacity to build mines. And I can think of a handful that are out there. But the smaller companies, to Rick's point, the smaller companies that have small deposits will probably never really mature into anything significant in the copper game, whereas they might in the silver game or the gold game. But the copper game's different because these ore bodies are big. Now, there are exceptions. There's smaller, really high-grade, high-margin copper deposits around where you can build a mine that's relatively small, but it's high margin, makes some good money, and small companies can maybe do that. But it's not like gold.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Ross, I wanted to follow up with you on a point here. So as you mentioned, copper is the key ingredient in the renewable energy transition. A lot of narrative around this transition right now. It's kind of tough to determine what's actually a realistic goal and what isn't. You've built a $1 billion business in the renewable energy sectors. You've got better eyes on it, I think, than our politicians might have. What's your take on our energy goals? How realistic are these? You say there's lots of copper, but is it accessible right now, and is the challenge actually getting it out of the earth? What's your take on that, please?
That's a good question, Jay, and I have been a real skeptic of a lot of this rubbish that I hear spoken by politicians and dreamers, or especially economists. I mean, that have absolutely no clue about the fundamentals of the mining business. You know, they go on, oh, we're going to need 5 times more copper and 15 times more lithium and 85 more times more rare earth metals to satisfy energy demand. If we increase renewable energy, 3 times, we're going to need all these multiple times more metals. And they have no idea, A, how difficult it is to find and do feasibility studies and permit and finance and then build, or the time frame, quite frankly. And they're using, all forecasts are based on assumptions, and most of these assumptions are completely crazy. So I discount them right away. And of course, all that hype feeds into certain, you get newspaper headlines, people who read things get all excited about the need for more critical metals, and so they go and buy companies' stocks that happen to be lithium stocks or cobalt stocks or whatever. And what we've seen in the real world is the hype has driven metal prices high in 2000, 2001, 2002 with all this hype that was going on, and they absolutely cratered last year. I mean, last year, lithium prices went down a ton, cobalt went down, everything went down except copper. So copper stayed relatively high because copper is not just a hype story, it's a fundamental story. And it's a story that's fundamental with respect to demand, not just for the energy transition, but 1,000 other things, plumbing and wiring of all manner of things, and metal construction, bronze and brass, and it's got so many uses and that's why it's called Dr. Copper, because the price of copper has traditionally, gone up and down with economic cycles, and you can predict what's going to happen to the economy if you look at the copper price. That's why it's called Dr. Copper. Well, you can add on to that Dr. Copper, truly it is an energy metal. It's as an important an energy metal as any other metal in the periodic table. So it is the critical metal, but it's got all these other things going as well.
And you're right, you can build almost nothing without it. If we want to electrify anything, we need a lot more of it. So what's your take on the deficit spread between supply and demand over like a 10-year time horizon, Ross? Regardless of how realistic many of these electric vehicles only by 2035 goals sound, what's your take on the deficit spread?
Yeah, so I'm as you can probably tell, I'm not bullish. I mean, I'm not a sort of a tout on copper. I'm not an irrational copper bull, but I'm bullish on copper, if you know the distinction. So the copper demand story is a very sound and profoundly important one for the next 10 years, I'd say. So that's going to keep copper prices very strong. They're not going to go crazy, but they're going to be very strong. And at today's price, or anything better than today's price, copper companies are mostly making really good margins. Their operating costs are about half of what today's revenue gives them, and that's a really good spread. So they're doing well, and I don't see that changing negatively. I see it changing, if anything, positively, but nothing crazy.